I'm Kalila Reynolds and welcome to Taking Stock. Can you tell I'm in the Christmas spirit already? Are you? Is it too early? I don't think so. But regardless, we're still bringing you all the latest business news and telling you how it will affect you and your money, especially in this season. Now, before we get started, head over to my website, KalilaReynolds.com, to subscribe to our newsletter. And while you're there, you can check out our other financial news and videos. You can click the link up here or in the description box below. Now come on, let's get this Christmas money.
First up, the National Housing Trust NHT is to forego $400 million in loan payments this year. We'll speak to Manager Corporate and Public Affairs of the National Housing Trust, Dwayne Berbick. And later, the analysts weigh in on the latest market developments. The economy is down 11%. But GraceKennedy continues to record significant growth. However, overseas, Mastercard reported a larger than expected drop in revenue and earnings for the third quarter. We'll discuss.
But first, here's What's Hot, brought to you by Jamaica Money Market Brokers, your best interest at heart.
The Bank of Jamaica has projected a 3% growth in the post-COVID-19 rebound in the upcoming financial year. That figure could rise to as high as 8% if there is strong recovery in tourism. However, the bank says it anticipates that the Jamaican economy will not return to pre-COVID-19 levels until the following year in 2022-23. BOJ Governor Richard Balls, however, said that the capital base of the financial sector has remained resilient despite the fallout in economic activity. He expects inflation to rise in the December and March 2021 quarters, possibly breaching the upper 6% limit of the BOJ's inflation target. It's as a result of infrastructure and farm damage from the recent heavy rains. Now, both the BOJ and the Planning Institute of Jamaica, PIOJ, are projecting that the economy could shrink by as much as 12% this financial year, up from the previous projection of 10%. PIOJ expects further contraction in the remaining quarters of the year, with preliminary estimates pointing to an 11% dip in the July to September period. Director General of the PIOJ, Dr. Wayne Henry, said the outturn was largely due to the ongoing pandemic, which led to a 13% contraction in the services industry and an almost 4% fall-off in the goods-producing industry. He said the economy is projected to contract within the range of 9 to 11% during the October to December quarter, taking into account the continued impact of the pandemic and recent rains. Meanwhile, inflation targeting has been enshrined in the objectives of the central bank with the passage of the Bank of Jamaica Amendment Act in Parliament recently. The legislation, aimed at modernizing and strengthening the central bank, also allows for greater transparency and accountability. It provides a regime for maintaining capital at the BOJ. For instance, it lays out conditions under which the government can borrow from the bank and limits how much they can get. The bill was originally tabled in 2018. Telecom provider Digicel wants to initiate the first tranche of a buyback of certain bonds, which can reportedly convert into a stake in the company unless repaid by June 2023. The company wants to initially buy back $10 million of the bonds, but pay as little as 20 cents US on the dollar. The notes are valued at $203 million US in total. They were handed out earlier this year as part payment to certain types of bondholders that participated in a deal to slash $1.6 billion US of the group's debt. A full take-up of the offer at 20 cents US on the dollar would lower the future stake claim of the group of convertible note holders to 37% from 49% and roughly shave off $50 million US of the group's estimated $5.4 billion US remaining debt. The tender offer expires on December 17. Jamaican Teas plans to head to the main market of the Jamaica Stock Exchange JSE, and it could happen soon. The retail manufacturing, real estate and investment company became a public company a decade ago. Chief Executive Officer John Mahfood said the company has exhausted its tax benefit on the junior market. Remaining on the junior market precludes companies from raising more than $500 million in a share offer. Mahfood added that discussions are also ongoing about listing the manufacturing arm of the company separately when it decides to graduate. Companies receive full income tax relief for the first 5 years on the junior market and then receive reduced tax at half the prescribed rate for the subsequent 5 years.
What's Hot was brought to you by Jamaica Money Market Brokers, your best interest at heart. And when we come back, we've been talking about the real estate sector amid the pandemic. We'll find out how demand for NHT houses has been affected. This segment of Taking Stock is brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance? Welcome back to Taking Stock. Times are hard, and many people have lost their jobs due to the economic fallout caused by COVID-19. So some important things have been put on the back burner, such as paying your mortgage. That's a big one. But the NHT is among those offering moratoriums. So how has the NHT been affected, and are people still buying houses in the pandemic? We're joined by Manager of Corporate and Public Affairs at the National Housing Trust, Dwayne Berbick. Hi, Dwayne. How are you doing?
Hi, Kalila. I'm well, thanks.
Wow, this is like a reunion from years ago. We worked together it feels like forever ago now, right?
Yes, I mean, what's a good 7 years or so?
Almost 10 years. 2010?
It doesn't feel like 10 years from sitting beside each other to now sitting across from each other.
I know, right? Well, you have transitioned from media to the public service, and you're doing, the public a good service by doing what you do at the NHT. But we've heard some news now about how the pandemic has affected the NHT and some measures that you've had to take. So just give us a synopsis of that as we start.
Well, we would have done our research and we've done our analysis as to the likely impact that COVID-19 would have had on our contributors, on our mortgagors. And so very early, from as early as March, if you could recall, when the Prime Minister came to make his budget presentation in Parliament, he would have announced some measures that the NHT would be undertaking, primarily to assist our mortgagors during this period and to ensure that they preserve this investment that they've made where home ownership is concerned. So one of the first things we did, we would have reduced interest rates for existing mortgages by 0.5% across the board. So all existing NHT mortgages as at April 1 got a 0.5% reduction in their interest rates. And we didn't stop there. We went a step further as well. And we looked at our mortgagors who we anticipated would be impacted by COVID-19, whether it's as a result of a reduction in income or whether it's as a result of job loss, which was an unfortunate reality we had to contend with. And one of the measures we implemented was a moratorium in payments for a minimum 3 months up to a maximum of 6 months, all our existing mortgages as well. In addition to that, we also waived late fees during the period April to September. So our mortgagors would have also benefited there as well. And I think those are the three major initiatives that we would have put in place over the last 6 to 8 months, which we used to cushion the impact of COVID-19.
So how much has that been costing the NHT?
How much has that been costing the NHT? Well, I don't have the numbers, I must say, unfortunately, as it relates to the zero.
Well, I saw $400 million reported.
Coming to that one, as it relates to the 0.5% reduction, but looking at 117,000 mortgages benefiting from a 0.5% reduction, that in their interest rate, that is significant. But to look specifically at the moratorium feature of our program, that would cost the NHT $418 million to be specific, that the NHT has decided to forego collecting those funds, and we will collect them, of course, as a moratorium suggests, on the back end.
Okay, so it's not that you do not expect to collect it ever. This is not dead money. You do expect to collect it after the moratorium period
That's
ends.
correct. So we would have asked our mortgagors to make an application for this moratorium, and we would have received, I think, in excess of 6,500 applications for this moratorium, and we would have looked and given a.
And how many customers do you have total?
Mortgagors, we have 117,000 mortgagors.
and about 6,000 applied. So that's not that bad.
No, it's not as bad as it would have appeared numbers wise. But bear in mind as well that some of our mortgages would have already, all our mortgages rather, would have already benefited from a 0.5% reduction in their interest rate. So they were already, as at April 1, getting lower monthly payments as well. So the moratorium was just another add-on to those reductions that they would have been experiencing. So yeah, the 117,000 mortgages, just a little over 117,000 mortgages, we received over 6,500 applications. And the math came out to around about 418 million that we're foregoing in collections now. And as we said, it's a moratorium. So whenever the period ends, whether it's 3 months for those who ask for 3 months or 6 months in some instances for some of our mortgages, then we will always work out how we do that kind of collection.
And what have most people been asking for, 3 months or 6 months?
You know, our Jamaican people, they go for the most that they can get, 6 months. But it really is not a matter of what they ask for as well, because part of our assessment of the mortgage as well is to see what works best. So in fact, we have gone beyond just a 6-month moratorium for some of our mortgages, because when we look at the specific factors that are affecting the mortgager, let me backtrack a little first. That's a COVID measure. The moratorium was for COVID specifically, but we did understand as well that there were some mortgagors who were already experiencing difficulties in terms of servicing their mortgage before COVID. So the NHT also had another special facility where we had individuals be given the opportunity to pretty much reschedule their mortgage. So yes, I was in arrears before COVID, and we used February, the end of February as the date, but COVID would only make matters worse. So if you were in arrears before, the NHT had another facility for you where you could benefit from not just a moratorium there, but also a reduction in interest rate and also an extension of your loan tenure. So if you say you had 10 years left to repay on your loan, but based on the monthly payments currently, you're a little challenged in meeting the monthly payments, you would reschedule that loan, stay for a longer period, 20 years, which translates into smaller, more manageable.
Remind me when the moratoriums began. Did you say April?
April 1 to September 30.
Okay, so that means those are finished now. So people now have to pay. Are you finding that people are still having difficulty paying?
Well, actually, the numbers would not have indicated that just yet. I think we would have seen the economy picking up a little bit. Not everybody would have gotten the 6 months. Some we would have given the 3 months in the first instance based on feedback, because it's a conversation between the mortgager and also the employer as well for some of our mortgages. And so we find that some persons are coming back on track. Just to point out though, that beyond this special COVID measure that the NHT has of a moratorium, which we extended between April and September. Let me first say it's between April and September to apply. So if an individual did not need it in, say, April and applied in August, their 3 months would start in August. So we're still assessing how our mortgages have been picking up and coming back on track. Beyond this special COVID measure, however, the NHT generally has options where we assist our mortgagers in terms of meeting their obligations to the NHT where they are having challenges. So April to September is just one period. Beyond that, if our mortgagers still have difficulties in terms of meeting their loan obligations to the NHT, whether it's as a result of COVID-19 or just general other factors, ill health, hardship, anything, the NHT does have measures that we continue to extend beyond September.
I know over the past couple of years, the NHT has been making an aggressive push. Prime Minister Andrew Holness has been leading the charge for NHT to build more house. And so lots of housing starts have begun. Has the pandemic affected that at all in terms of demand? Are you seeing the same level of demand pre-COVID for homes?
When we look at the numbers, and we would have last looked at them in the quarter about July, August, we weren't at that time seeing a significant fallout comparing 2019 and 2020. We weren't seeing a difference, a significant enough of a difference to form a conclusion about the impact. So I would think where housing is concerned, we continue to hold strain. And we will hold strain because those numbers would show that we're holding strain as well because of the strong demand for housing. So even though a particular groups within our contributor base would be impacted by COVID-19. There are others that perhaps may not have. In addition to that, when we look at the loan underwriting process and the mortgage process as well, it's a process that takes anywhere from between 90 days to 120 days on average, and even beyond that. So I think going into the last quarter of our financial year, we will have to look again to really see the impact that COVID-19 would have on our numbers. But some of the mortgages that we would have had coming in during this period are probably mortgages that would have been in train from before. So I'm not sure we're at a place yet where we can say, based on what we're seeing, there has been a significant impact on the take-up of our mortgages back
Because
COVID-19.
that would have been my next question. So are you seeing you're still getting the same level of new mortgages coming in? So separate and apart from those who had existing mortgages and those who may be facing challenges in making the payments, do you find that people are still coming to you for the same level to sign up for new mortgages?
Yes, people are still coming in at the same rate or probably even higher. When we look at our branch network and we take the feedback there, we take the feedback through our customer contact center. When we look at some of the campaigns and some of the messages that we've been pushing on social media and on traditional media as well, there are higher levels of engagement around the home ownership process. And so we are seeing not a significant fall off at this time in the take-up of mortgages, especially new mortgages.
That's very interesting because that's something that we've been looking at in the broader real estate space outside of the NHT, whether there's been a fall off in demand, and it doesn't seem so. People are still coming for people still purchasing property, still purchasing homes.
Yes, because when you look at the wider demand for housing in Jamaica, it's pretty high. It's pretty high, and housing is not buying a car. It's not going to the supermarket. It requires planning.
It's a big commitment.
Yes, it's a very big commitment and it requires planning. So many individuals would have been planning for this probably from 2 years, 3 years down the road. So the few months since we've had COVID would not have thrown off individuals, perhaps because they would have still have plans in place, concrete and sound plans through investments and other saving instruments that would allow them to still realize their home ownership goals, notwithstanding the pandemic.
How many houses are you on track to build this year?
For this year, we would have been on track to start, and we speak in starts and completions. Our starts remain on track for in the region of 6,000 to 7,000 housing starts. Looking at the last 4-year housing construction program that the NHT has, by the year 2021 financial year ending March 31, we should be at around 21,000 housing starts over the 4-year period ending March 2021. And based on the numbers, we're on track for achieving that. Of course, where completions are concerned, however, we would have had some kind of impact there, whether through
Right, because construction was halted for some time, no?
Precisely. And we had different lockdowns in different parishes where, we had to take some measures to contain the spread of the virus. And in those areas, of course, the free movement of workers to our sites would have been impacted. And so the delivery part of it in terms of the housing completions would not be entirely on track. We are working, I know the team is working to see how best we can make up for lost time, and we continue to work with our developers and our contractors where that is concerned.
How much time have you lost?
It's hard to calculate because different projects and different sections of the island would have been impacted in different ways. And based on our housing program, we pretty much have a presence in every parish.
And notice that the NHT has been doing a lot more in the apartment space too. Traditionally, we've thought of NHT for houses, but you guys have been, there's a big apartment complex on Ruth Van Road, for example. There are plans to do more apartments?
The NHT is driven in terms of the housing mix that it undertakes by our housing demand surveys. So we don't build what we feel like we want to build. We build what our housing demand survey says the market requires. And so you will find that in a Kingston and St. Andrews, as an example, that there are some considerations that would force the NHT to undertake a Ruth Van Towers as an example. There isn't just sufficient space for us to do the kind of detached housing with backyards and gardens that our mortgagors can put in place. There is the land space to do that kind of thing in a Kingston and St. Andrew. But you find that as we move farther out from the capital, we're going to St. Catherine, we're going to Clarendon, and Manchester and other areas, then you see we move to the more detached settings. So to answer your question, the housing mix, whether we go apartments, whether we go townhouses, whether we go detached units, is always driven by our housing demand survey, which looks at what our contributors want, can afford, and the NHT matches that.
And what's your survey showing? What's your survey showing, that they want more apartments?
No. It shows that our survey shows two major things. It shows that there's still, amongst our contributors, the strongest demand is for NHT type developments, and of course persons want something a bit more detached with their yard space.
As I said,
we are constrained in certain areas like a Kingston and St. Andrew, right, in terms of what we can do.
Family space, family homes.
That's correct.
Thanks so much for your time, Dwayne.
A pleasure, Kalila.
All the best.
Up next, we've got your market recap, and the analysts are standing by. This segment of Taking Stock was brought to you by Bulwark Insurance Agent, insurance made easy, and Massey United Insurance. How good is your insurance?
Time now for your market recap, brought to you by Sagicor Investments. Think wealth, think Sagicor Investments. The Jamaica Stock Exchange had a pretty good week, with the combined index up by nearly 10,000 points, or almost 3%. 99 stocks traded across both the main and junior markets of the JSE for the week ending Friday, November 20, 2020. 45 advanced, 40 declined, and 14 stayed the same. Nearly 112 million shares changed hands on the Jamaican dollar market, totaling $2.8 billion. QWI Investments traded the most, taking up nearly 15% of market volume. The stock gained 2 cents to open the week at 73 cents. Sagicor Select Funds M&D traded the second highest, with people buying and selling 15 million shares in the company. The stock lost 2 cents to open the week at 70 cents. And NCB Financial Group rounded out the most traded, taking up 13% of market volume. The stock gained $15.99 to open the week at $149.98. Now let's see who had the biggest gains. Cargo handlers jumped nearly 20% to close last week at $7.60. Palace Amusement Company rose 15% to close last week at $1,265.01. And rounding off the biggest gains, Margaritaville Turks stock advanced nearly 15% to open this week at $56.23. On the losing side now, 138 Student Living Jamaica fell nearly 24% to close last week at $3.51. G West Corporation ordinary shares fell 20% to end last week at 70 cents a share, and Jetcon Corporation lost 16%, down to 71 cents. Market Recap was brought to you by Sagicor Investments. Think wealth, think Sagicor Investments.
This segment of Taking Stock, The Analysts, is brought to you by Jamaica Money Market Brokers and Proven Wealth. Welcome back to Taking Stock. I've got a team of analysts to examine the week in business. I'm joined by investment, research, and sovereign risk analyst at JMMB Group, Leovaughani, Dillion. We also have investment analyst at Proven Wealth, Julian Morrison, and business writer at The Observer, David Rose. Welcome back, guys. So you see I'm in the Christmas spirit already.
It's good, Pascal.
I feel like Christmas shopping has begun early this year, partly and decorations, maybe because people are just so pandemic tired and there is no social activity going on or limited social activity going on. So that might be a good thing for business, don't you think?
For sure. I have started some of mine.
Yeah, I definitely started early. Normally I wait until December 1, but I was like, we need something, man. We need something to be going on. So on that note, we're talking about the...
Go ahead.
No, you go ahead.
No, I was just saying that some suppliers, they were thinking about, well, there have been talks of the fact that things might come in more slowly because of the whole COVID situation, and sometimes inventory might come in more slowly. So, some of them are saying, it's good if they start early. One store operator told me that.
Yeah, that's true. But I noticed like the sales, even abroad, like the Black Friday sales have started early. Usually it's post Thanksgiving, but they've already started those. So Christmas activity, I've noticed that it started a lot earlier than usual. And so that has an impact for the economy. I know the business sector is very hopeful for Christmas sales given the year that we've had. PIOJ has just reported some numbers. The economy declined 11% between July and September. And we expected a decline. That's no surprise. The number is what's new. David, do you think it could have been worse?
It could have easily been worse if we were still under certain restrictions in the economy, the border being closed and the tighter curfew times. So it could have easily been worse. How comes JPS, or in this case, electricity consumption was lower for the period, even though everybody's at home and some persons have gone back to work? So the way it works is that JPS charges electricity on different rates, basically. So at the rate 10 and 20, which is like me and you at home, regular consumers, we make up about 40% of JPS's customer base, but we don't contribute significantly to overall revenue. So when it comes on to who contributes the most, it's like the big industries, we're seeing Courage, Stripe, and those other big manufacturing entities.
Yeah, and schools as well, David.
And hotels, and even entities like Palace Amusement. So with that, as I said, step back decline, increased activity and so on, those bigger players who usually will be paying more in energy costs aren't necessarily using more energy. And even in the case of our good old friend Wisynco switched on to the LNG plant back in July, so that will be one less player using JPS's grid directly. So there are different factors that are coming into play right now as to why certain sectors of the economy are taking a hit. And with the recent rains, as the agricultural sector to take a bigger hit when the next report comes out, because right now we're starting to say that we're expecting a food shortage or a vegetable shortage in Christmas just because of the damage that has happened in the last month from the extended rainfall.
Speaking of the rainfall, so that hasn't even been factored into this latest PIOJ numbers because those numbers are July to September. So we're going to see an even more significant impact when we see
October, November, December quarter reported because of the rains, the flood damage. What I think the Prime Minister said they're going to be pumping $1 billion for road repairs. But Julian, what is your assessment of the latest numbers by the PIOJ?
Well, it is a very sobering report, much worse than I anticipated. So before, we would have been a bit more optimistic because of the relaxation of the restrictions surrounding COVID-19 prevention. But what the numbers are saying is that, as David mentioned, we have much further to go. When you look at the impact across sectors, that was the main story or the main theme. It shows that almost every industry is under some significant stress because of the fallout. Still, even after the sharp decline in June. So it's sobering. It's very interesting to see how construction has recovered in contrast to the rest of the sectors, and also the fact that agriculture held up as well. I thought that was interesting.
No, the construction really surprised me. When it's the Carib Cement numbers, we just did Money Mondays on Carib Cement recently, and seeing that those July to September numbers was impressive.
Yes, it is really interesting to see that because it supported what happened. It's putting all the pieces together. And I was just doing some research about road surfaces in light of us experiencing significant damage. And what's interesting is that some, and this is how I understand it, I'm not an engineering expert, but based on what I discovered, I think some of Carib Cement's products may be used in the repair of roads, right? So that could also be a tailwind.
Yes, that's true. So cement roads are a thing. There are several countries that, like Mexico, for example, has a lot of cement roads. Belize, where I'm from, has invested in cement roads. They're more durable than using the regular tar and the regular asphalt, but it's also more expensive. Leo, let me hear your assessment of where the economy is now.
Yeah, it is unfortunate. They take a big hit in the June to September quarter. What we're expecting, though, is that, yes, this is going to continue. Again, to what David said, because of the rains, the October to December quarter, that also could be challenging, coupled with COVID. However, if you look out a little bit more into the future, though, there is some positive news on the horizon. So you're seeing where there's a lot of vaccines are getting approved now. They're seeking approval, some of them seeking emergency approval, and you could see these are the effective rate of some of these vaccines is well in excess of 90%. Meaning that if you take the vaccine, there's a 90% plus chance that you're not going to get COVID. As the manufacturing ramps up into 2021, then you could have more persons getting vaccinated. Now, granted, having the vaccine and persons getting vaccinated is a different issue. Because then you have a messaging issue. Because a lot of persons, they have questions about the vaccine and how good it is and if it's going to harm them or their children or whatever. But as you work through it, the first step is getting the vaccine, and then the next step now is getting that messaging and see how persons take to the vaccine. I'd like to go back to something Julian had said too about the Carib Cement numbers. Brilliant. Everybody saw that. I mean, for the full, for the 9-month period, for the quarter ended September, brilliant numbers. The roads is a good positive for them in the near term. If they can get that going, that has been a thought that's been around for years though, to create cement roads in Jamaica, as in concrete roads, because they're more durable. And then of course, Carib Cement is a local company that would benefit a lot from doing that, right? However, there's always been that issue about the money, because of course it costs a lot more to build. And over time, it could work out cheaper, because if you build it once and for argument's sake, it costs 5 times more,
right?
It lasts 10 times
much longer.
Long, then you're good. But it's just that initial outlay, there's going to be some issues with that, especially like how there's a lot of constraints in the economy now because of the conjunction of COVID.
Yeah.
So, the government have to be a little more mindful of every penny.
I think Petrojam is. I think asphalt is manufactured at Petrojam. No.
I'm not one of the.
I believe that's one of the products that they offer.
So.
Maybe it's not.
Yeah,
maybe it's not. Maybe we don't get our full complement from them, but I believe they do offer asphalt is one of the products that they do.
Yeah, but what I'm alluding to is that Carib Cement is more from the ground in terms of the raw materials, everything, the production, everything is local. That's what I meant. The whole the whole supply chain for it.
Right. So for Petrojam, the inputs would still be imported.
Yeah, the inputs would still be imported. So, there's a lot of some lost value there. But yeah, and I think, of course, again, just having a good road infrastructure is great for the economy in the long run. But I mean, again, we have to understand streams in terms of the money, to spend now to build out something like that.
Let's look at GraceKennedy's results. David, what are you noticing with GK?
Well, GK is just being the big winner in this pandemic. So net profit up 35% to $4.4 billion. Revenue significantly up as well. And the big kicker for GK has been, in terms of where the growth has come from, is in their food trading division. So that's like your high-low, their manufactured brands, their tropical rhythms, those various brands that have been supported by everybody sitting at home. So it's actually there. So even though food trading revenue has gone up by 11%, the overall bottom line has gone up by 86% year over year. And this is a business that usually takes in, as I said, a low margin already. Usually before, it was the money service business that brought in most of the profits for the overall GK group. However, food trading has basically caught up to money services, because even though food trading carried most of the revenue, money services carried the profit, which actually is used to pay dividends. And GK declared an even bigger dividend for the fourth quarter, in the sense that they're declaring 55 cents compared to the 40 cents they paid last year. So for the overall year, GK has paid about 5 cents more in terms of dividends, which is somewhat sobering in a sense, but compared to the reality where you have NTB and other big companies cutting back on dividends or holding off, but one company to be paying more dividends on top of their continued growth, it's a positive sign. And on the investor briefing on Monday, Dan Webby actually pointed out that the company's new M&A unit has identified about 12 acquisitions, not just in Jamaica, but across their varied markets, like Canada, US, and so on. And there's still a partnership with Nestle to manufacture some dairy powder, some milk powder, and they're actually looking to open a new GK1 cashless branch at UE. So GK is having all the quote-unquote stars aligned, because their 9 months results were just probably like 400 million short of just hitting their 2019 numbers. So basically, GK is already beating out their 2019 numbers in effect by 9 months. And remember, there's a correct key.
Wow.
Just turn a profit compared to the years of losses upon losses upon losses. And they said, GK is missing, right? It should be settled by the first quarter of 2021, which should bring in some needed capital to support the business. So there's a lot of, I would say, upside or potential in the GK group. As I said, 12 acquisitions lined up, have cash to deploy, and just great numbers coming out consistently.
I'm curious to see what those acquisitions are when they're finally announced. But from the fact that they built out a whole unit, the M&A mergers and acquisitions unit, we knew that they had some interesting things in the pipeline. But Leo, talk to me about how their financial division, their money services have been doing, because David spoke a lot about the food division has been doing very well post-COVID, but how has the financial services for GK fared?
It's fared fairly well. If you look on the GK money service, that's like a lot of the remittance business side. That has been growing consistently from Q1, Q2, Q3. Again, as to what David alluded to, food trading is actually where you're seeing the big more upside coming from. But the money transfers, remittances has been a steady growth for them. It has powered them forward. If you look on how the company has been trading, as in the stock, but the out on November 5. November 6 is where you saw volume skyrocket over 6 million units traded. And then several days that you're seeing where the volume traded on the stock for 4.7 million units, right? So overall, you're seeing where investors seem like they want to be positioned into this stock, given the strength of these earnings. Some segments were heavily impacted. So for example, when you look on the insurance segment, especially in Q1, Q2, but overall, the company benefited. While other segments benefited, it just so happened that the ones that benefited a lot more than the ones that lost out because of it. So overall, what you're seeing from GKs are down about 60% for the year.
right? About that. The overall market is down about 24%. So you've seen some outperformance in the stock price from that perspective. And the thing is, these earnings kind of justify that. And if you look on like even the PE metric on it, it's about 10 times earnings, which is relatively cheap. The price to book is about 1 time, which is again relatively cheap. So from a valuation perspective, you're having value and the company is showing you that it can perform in good times. And because of the structure of the company, it can put out some good performance even when times are a little bit tougher because of the makeup of the company. So it's showing itself to be definitely a blue chip stock. And the strategies that they've implemented over the years seem like it's paying off now for them. So all in all, is a really good number. There's really a little you can find that's problematic with it. Because I mean, across the board, margins are up, operating margins in most of the segments are up. So I mean, all in all, it was a good number in this, especially in this time. So
Yeah. Let's look abroad a little bit, which also has some implications locally. Julian, you have your eye on Mastercard, and they were just on this program last week, just on Taking Stock, because they've established a presence here in Jamaica, seeking to get more of the Caribbean's business. What are the overseas numbers looking like for Mastercard, Julian?
Well, Mastercard's 9 months report has come out. So we're seeing that revenue declined 10.33% to 11.19 billion. Total expenses, however, remain flat. That's operating expenses at 5.16 billion, while earnings overall have decreased 23% to 4.63 billion, right? So we've seen where they took a hit, but they've been focused on efficiency and being very careful. Further details, right? Long-term debt has increased about 48% to 12.57 billion. So they issued 3 debt instruments totaling 4 billion. So what they've been doing is repositioning the business from some of the fallout that has taken place from the COVID-19 shock, because transactions, which is how they generate income, fell very sharply in the April to June period. And even before that, because they're exposed globally. So even in territories outside of North America that would have started to face stress from COVID-19 restrictions would have impacted Mastercard. However, since that period, they have seen some recovery because most economies have moved away from the tighter restrictions around COVID-19 and have started to become more buoyant in terms of economic activity. And spending has followed this, and that has trickled down into Mastercard's performance. But it's just not enough to recover what they have been through for most of this financial year. The good news is their operating cash flows they're still healthy. They are down maybe about 4.5%. So they're still in a good position. The business really faced some pressure, but their balance sheet is good. Their cash levels are good. And as I said, their operating cash flows are up there. So it means that the quality of their profits are still good.
I thought a company like Mastercard would have been in a great position to benefit from this entire digital shift that we're seeing post-COVID.
Well, I agree. I think it is a good tailwind. It's something that should push them further in this financial year outward. So that means that the outlook would definitely factor that in. And that would be a major advantage because most economies around the world are becoming more cashless. And this should give major support to large companies like Mastercard. So in terms of where their price is, it's in the neighborhood of $330. They're listed on the New York Stock Exchange. I think the price for where it is in terms of the performance of the business is fair. But yeah, I think it's a decent company. It just will take a while for them to come over this hump because of the steep fall off in the travel business especially. You know, they do a lot of cross-border transactions and it took a big slam. But they will be okay when things normalize. And they should recover quickly.
So do you have MasterCard as a buy there at Proven Wealth? And if so, for whom?
Okay.
What type of consumer would be looking at MasterCard as something for their portfolio?
So officially, we don't have it as a buy, but I can just say generally that is worth considering. It's something that is not a waste of time for investors. So that means that investors can do further research to confirm what we shared and to give it a second look. because compared to other companies that are reeling under the pressures of COVID-19, Mastercard is one of the better positioned companies based on their balance sheet, the technology, putting them at an advantage, as we just mentioned, and other factors in terms of them being resilient around their operating cash flows. So it's worth looking at, but we don't officially have it as a buy recommendation.
Well, can I comment on that, Kalila?
Sure, go ahead.
So even early this week, Mastercard, in alliance with EPay is issuing out free Mastercards to, I believe it's a public sector association. So about 12,000 persons are going to be getting Mastercards, and that's just from one association. And you also have Scotiabank switching over from Visa for their debit cards to Mastercard debit cards now. And even Sagicor is going to a new type of debit card. They have different currencies, Visa or Mastercard, but most of the credit cards, the Jamaican dollar ones, are still Mastercard. So there's a heavy upswing, as I said, within the Jamaican space for that opportunity. And even Mailpack themselves have their own prepaid Mastercard coming out shortly. So Mastercard is getting that greater presence within Jamaica.
Absolutely. We see where the country office has made a big difference in 1 year.
Right.
Having that physical presence here.
It fares well for diversification for them to have a push in this region. So that's good as well. They're already positioned well globally, but it's good that they're still looking to diversify. So it brings down the risk.
Yeah. Well, thanks for joining me, guys. Always a good discussion.
Thanks.
All right, Kalila. Thank you.
All right.
This segment of Taking Stock, The Analysts, was brought to you by Jamaica Money Market Brokers and Proven Wealth. That's our show for this week. Thanks for watching. Make sure you like this video, subscribe to this channel, and share with a friend. Also subscribe to our newsletter at KalilaReynolds.com and turn on those post notifications so that you can be the first to see all of my other features. We want to help people learn more about money so we can all get this money together. This week on Money Mondays JA, did you know that a company can be suspended or delisted from the Jamaica Stock Exchange if they don't follow the rules? We'll take a look at a recent example, the Canadian cannabis company Tree of Knowledge. And on Money Moves JA, the data Don Anderson is back. He's telling us how to segment our target markets for customers. Follow me on Instagram and Twitter at Kalila Ray, and follow at Taking Stock JA on Instagram. If you want to connect with the analysts this week, check the description box below for their contact information. Also visit our website, KalilaReynolds.com, for financial news you can use however you like it. Watch, listen, or read. Now tell a friend about Taking Stock. Investing is the new sexy. So let's make it cool to talk about money. I'm Kalila Reynolds. Stay safe.